Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Registered representative and financial advisor of Park Avenue Securities, LLC, PAS. Security products and advisory services offered through PAS, member FINRA, SIPC. The Bullfinch Group is not an affiliate or subsidiary of PAS. This firm is an agency of the Guardian Life Insurance Company of America, Guardian, New York, New York. Life insurance offered through the Bullfinch Group Insurance Agency, LLC, an affiliate of the Bullfinch Group, LLC. The Bullfinch Group, LLC is not licensed to sell insurance. California Insurance License Number OF 11617. Links to external sites are provided for your convenience in locating related information and services. Guardian, its subsidiaries, agents, and employees expressly disclaim any responsibility for and do not maintain, control, recommend, or endorse third-party sites, organizations, products, or services, and make no representation as to the completeness, suitability, or quality thereof. 2024-169104, expiration 2/26.
Welcome to another episode of Grow Your Business and Grow Your Wealth. I'm your guest host, Jack Reeder, sitting in for Gary Helt, CPA. Today we're joined by Grant Daffin, CPA and founder of Daffin Financial, an accounting and advisory firm that helps entrepreneurs and growing businesses with tax strategy, CFO services, and financial operations. Grant combines public accounting and industry leadership experience to help companies make smarter financial decisions. Welcome, Grant.
Thanks for having me.
So, looking at your background, you studied applied economics and management at Cornell. Tell me a little bit about kind of how you said, all right, I think I'm going to get involved in accounting and finance. Just kind of go back in the way back time machine for a minute, bring us up to that point where you made that decision.
Sure. To be honest, I didn't really know what I wanted to do for the first couple of years of college. I think I was a biology and society major for those first 2 years, and I don't think even now I can tell you what that means exactly. And then, but I grew up around lawyers and CPAs, and to be honest, my dad just happened to suggest to me one day to maybe try some accounting classes, and so I did, and I just happened to be good at it. So I transferred into the applied economics and management school where you could specialize within accounting and finance or some other specializations. And it was a difficult process to get into that, but I got into it, thankfully. And then from there, I finished out my degree, and I went to graduate school at the University of Minnesota and got a master's in accountancy at the Carlson School.
Okay. And then tell us a little bit about the beginning of your career and the things you did before you founded your firm.
Sure. So the first real job I had in accounting and finance was while I was in graduate school. I worked at U.S. Bank headquarters in their internal audit department on the corporate functions team. And by this point, I think I had already secured a full-time job when I finished graduate school with Ernst & Young, EY now. And so after I finished graduate school, I worked at EY in their external audit service group for about 3 years, first in their Tulsa, Oklahoma office, and then I transferred to Denver. I worked on a variety of different public companies, mostly a couple of private oil and gas companies, but logistics, transportation, oil and gas, some software companies. And really, most people don't know this. I was just having a discussion this morning with one of my partners, one of my strategic partners, about internal controls. Most people don't realize when you're doing auditing work, you spend 80% of your time auditing internal controls and only about 20% of the time on financial statements. So we were discussing this morning a strategy of bringing more of that knowledge and understanding to small businesses because you can scale up or down internal controls based on availability of labor and needs of the business. It can be customized to that, but most startups and small business owners don't have any experience with internal controls and don't really recognize the importance of it. So we were just talking this morning about how to maybe bring some of that to our clients.
Okay, so that sounds like something that you learned in the earlier part of your career that
Right,
you're bringing to how you advise clients today. Are there
right.
any other lessons from those earlier experiences that still influence how you advise clients today?
For sure, and I realize I forgot to answer your question about how I started the firm, but I'll answer that one first. The other big lesson, I wouldn't say so much applies to my clients, but more to our firm and our culture, which is I learned very quickly at those jobs at US Bank and at EY. Although I had a great experience and really liked most of the people that I worked with there, they were really excellent at their jobs. The culture is not so great, and they work you like a dog and drastically underpay most people. And I think they do that intentionally because they have virtually unlimited resources and they've just decided to deal with the revolving door of talent rather than try and build a long-term culture. So I realized pretty quickly that that was not a strategy that would work for a smaller firm like ours. We don't have unlimited resources. We need to build a culture that people want to be a part of. But more importantly than that, that's just not how I want it to be treated. And that's not how, for that reason, it's not how I want to treat our team members. So that was the other major lesson for me from that experience. But I don't want to bang on them too much because I really did have some excellent people that I worked with there. It was more just the overall corporate nature of it, I think, that led to that poor culture.
Um, Fair enough. So tell me a little bit about how the work that you did in the working for companies as opposed to being at E&Y or even it was a U.S. bank,
Yeah, that's right.
but how the operating company experience has influenced your the work you do now.
Well, in one very specific way, which also relates to the question of how I started my firm. So I worked at a manufacturing company in Littleton, Colorado, that made a very cool product called activated carbon, and it's an environmental product really that's used to capture mercury emissions from coal burning power plants. So it was a really cool product, and they had some really interesting R&D going on there. But when I went to that job, I didn't know anything about sales and use tax when I went into it, and neither did anyone else at that company, as it turned out. And they came under audit by the state of Louisiana and various parishes there, which a parish, if people don't know, is like the equivalent of a county in other states. So they came under audit for sales and use tax. And I just kind of took it upon myself to become the de facto expert there on sales and use tax. So spent a couple months really digging into it and then started representing my employer in the audit, and did that for a few months. And by this point, I had already created my firm, the entity. I'd already incorporated the or organized the LLC. And so I was just kind of waiting for an opportunity to make the jump. And I realized that was my opportunity. So honestly, I just went in and quit my job one day and made them an offer to represent them in the audit under my firm's name, and they accepted. So I got lucky there, and from there it just became word of mouth, and yeah, been building ever since.
That's a great story. So your first client was your last employer.
Right. That's right. We've been doing sales and use tax work ever since, actually, because I learned from that experience that most businesses don't even know that use tax is something that exists, and they know what sales tax is, but it's become increasingly complicated ever since the South Dakota versus Wayfair Supreme Court case back in 2017. So we're able to provide a lot of value on that front for
That's
clients.
great. And I'm sure that those companies can get into a lot of trouble and owe a fair amount of money
Yeah,
that they didn't know about.
it gets
Uh,
complicated quickly.
yeah. Uh, so um, I'll let you answer this, but I think I get it. What motivated you to start your own firm?
To be honest, kind of a selfish reason. I really wanted to build I really believe that you could run a successful accounting and advisory firm with a great culture. It didn't have to be like it was at EY or at US Bank. So that was really my mission, was to build a firm where people actually enjoyed working there. They wanted to stay there for the long term and build something really great together, with honestly a secondary goal being to help our clients. I resonate a lot with other accountants who, so many of them have the experience I did, where they work constantly, they're drastically underpaid, and so I wanted to build something better for my colleagues.
And by the way, how many people are part of your firm now?
Right now we have 7.
Uh, and do you have a growth plan or some idea of how big you'd like to get ultimately? Or
We're still trying to settle on exactly what numerical targets to hit. So I'm not really sure. I know the types of services we're going to continue providing, and the types of clients that we really want to work with. But to be honest with you, we're still kind of right in the middle of working out what we want the end goal to be.
okay. And speaking of clients, which types of clients would you say you most enjoy working with, or would be, the ideal client?
There's a couple different ones. I would say top of the list would be manufacturing companies. Um, Manufacturing, we have a lot of experience with that, but manufacturing companies are inherently a bit more complicated on the accounting and finance front, particularly when it comes to their cost accounting um, and their inventory. And you also, not only are the accounting methodologies a bit difficult, and it varies with the level of complexity, varies with the nature of the manufacturing company, but they really need good internal controls around those areas in particular. And we have a lot of experience with that. And smaller manufacturers, one of the reasons we like working with them is they often recognize the need for that. They felt the pain from not having it. And so they've always been really good clients that we are able to provide a lot of value to. And they typically need at least 3 of our 4 service lines. So they're great value for us as well. The other clients that we really like to work with, another group I would say would be health and wellness and fitness clubs. So we have a yoga studio client, and we've had gyms previously as well. And one, that's just a type of business that I believe in supporting. I think that's good for society. But same there, our experience has been those folks' background is typically in health, wellness, fitness, and they recognize the need for help on the accounting and financial front. And they also typically need at least 3 of the 4 service lines that we provide. So those have been another great set of clients for us, and one that we're recently decided to start targeting, which I think is a really good fit for us, is medical practitioners, primarily physicians in private practice.
Okay. And so you mentioned a couple of times the 4 lines. Just tell me, what are those 4?
Sure, those would be fractional CFO services, fractional controller services, which a lot of people aren't familiar with that term, which I can explain if you'd like. But then the other 2 would be income tax and sales and use tax. And on the income tax front, we do return preparation for all of our tax clients, but we focus heavily on the planning side and do planning work basically year round for them.
Yeah, so do differentiate between the fractional CFO and the fractional controller
Sure.
service.
I think the best way to think of a controller is like a chief accounting officer and someone who would also be in charge of implementing and maintaining internal controls. And like I was saying earlier, I think that's something that a lot of small businesses and startups are lacking, and they're just not aware of it. So that's really what it is. It goes beyond what you might think of as, we actually used to call our service bookkeeping, but we dropped that because we were doing so much more than that. We were helping clients build their systems of internal control and manage those and prepare financial statements. And, bookkeeping is more like categorizing transactions and maybe, processing AP, processing AR. So we go well beyond that with our controller service.
So have you ever had someone that you were, they wanted a fractional CFO, and after you talked with them, you realize what they really need first is a fractional controller?
Yeah, a number of times
Yeah,
actually, which is great. I love when that happens. It's just another area we can provide value to them, you know.
that's interesting. Um, so sounds like you work with a lot of entrepreneurs, owners of small businesses. Um, what would you say are some of the most common financial mistakes that you see them make, perhaps before they hire you?
Well, one would be they often will get into negotiations and get very close to selling their business before they actually reach out to anyone to do any sort of tax planning around it. And that's something you need to start well in advance. So really, ideally, you should be thinking about when you're first starting your company and organizing it, you should be thinking about the best structure for it for tax purposes at the beginning in consideration of what the most likely exit plan might be. We've had so many people reach out to us where they're like 60 days from closing the sale. And they want to do tax planning at that point, and we just tell them like, I'm sorry, but you're way too late on this. So that would be a very common one that we see. Another common one would be related to what I was just explaining about the difference between bookkeeping and something more like a controller service. When you have no internal controls and you also just don't have a deep understanding of financial statements and accounting, I feel like a lot of clients think that their financial statements are correct and they're not. And I can't really think of a single client we've ever taken on that already had some level of bookkeeping help where there weren't some pretty significant errors that needed to be remedied. So I think a lot of business owners just think there's really nothing beyond bookkeeping, and they just don't know that there's actually more that's needed once you get to a certain size. Like, if you're just starting out your business, you're 6 months into it, you probably don't need a controller. But once you really start to get some traction and start to grow, that would be the time to up your game on that front so that you can grow successfully. Because once you start to grow and you have no internal controls, and that growth becomes significant, that's when things start to fall apart. And then you're trying to fix something that's broken, which is much more painful than just dealing with it on the front end.
That's interesting. I'm wondering, do you think that the, let's say, inadequacy of the financial statements or reporting is linked in any way to the fact that or the possibility that the entrepreneurs used to having to present financial statements to banks for loans, and that's what they're used to having to provide what the bank is asking for as opposed to what's really good for, you know, their own purposes?
I think
Or is
that's
that,
correct, actually, and that's a great point that I hadn't really thought about. Maybe driving some of that. They probably do think that because the bank maybe looked at it and signed off on it, that that's good enough for their own internal purposes. But I would definitely disagree with that. In my experience, bankers are typically, checking their boxes.
yeah,
And they're not really digging deep into the financial statements most of the time. Now, I'm sure there are bankers that do that, and it depends on the size of the transaction, of course. But I think you're actually spot on about that. Um, and bankers aren't looking to see if you have controls in place that are going to prevent you from losing money, right?
right.
And that's something that's very relevant to the business owner, but not so much to the bank necessarily. And they're just not going to be looking for that.
Yeah, I just thought of that as you were talking, and I thought, there's so little coordination among various advisors. I think that's always something that I'm trying to figure out
That's a good point.
how for everybody to do a better job. Um, so when you think about the advisory services, CFO services, controller services, um, you sort of alluded to it, but how would a company, if I had a company and I were the founder and now it's growing, at what point or how would I know, okay, it's time to get a more, maybe the first thought is, all right, I need to bring in a full-time bookkeeper. And then at what point do you say, you know what, I need more sophistication. I think maybe I need part-time or, outsourced controller or CFO services. What
I
would be
think
the
you
kinds
would,
of things?
I think you would probably want to start with that bookkeeper at the point at which it's taking up too much of your time as the owner, the founder, when you need to be focusing on strategy and growing the business. And then for the second step, up to a controller type service, I would say it's probably more linked to your revenue size. Also, still, saving you time. If you end up dealing with a lot of financial issues, still, even if you have a bookkeeper, that would be another sign. But really, it's not cheap to provide or to pay for controller services. So once you get to a certain revenue size, I would say at least probably 1 million and up, ideally 3 million and up in revenue. I think that's the point at which you would definitely at 3 million for sure, you would want to get more of a controller type service. And again, especially if your growth trajectory is strong.
So let's switch topics for a second. When you think about technology and trends that are impacting your industry, the accounting and advisory profession, what do you see happening now, and where do you see things going? Everybody's talking about technology and AI, of course.
Sure. Yeah, I suppose AI is the big one, so I'll just give my opinion on that one. One, it's really exciting to see what all these different tools can do, and it's really interesting to dig in and figure out how we can use them in our business. Um, One of the pitfalls I've seen is it seems like there are, and I'm speaking anecdotally, but it seems like there are a lot of people that over rely on large language models like ChatGPT that are pulling from the entire internet for very technical questions, tax in particular. Um, and we've tested ChatGPT when it comes to tax questions, and not only does it get a lot of the more nuanced questions completely wrong, it'll present the wrong answer in a really sophisticated, convincing way. So it's dangerous when you do that, and you really have to be careful not to over rely on certain systems in that way. There are tools though, like one that we really like and use for tax work is BlueJay, because it sits on top of not the entire internet, but just authoritative and reliable tax materials. So the actual law, regulations, public letter ruling, private letter rulings, case law. It's not pulling from the entire internet. So that is a much more reliable type of tool. But I think ChatGPT and other tools like that are great for doing like a financial statement analysis and that sort of thing, where you're less likely to get a wrong answer, and it's easier to verify because you're working with the same numbers. And it's really great at helping us just prep deliverables in a faster, more efficient way. Um, so that's been my main takeaways from the AI front, honestly. Where it's going, I have no idea, other than to say my own feeling, my own instinct about it is that people are always going to want to have another person advising them when it comes to their money and their business. And I don't think people just want to deal with robots when it comes to that. I know I certainly don't. And I think you really still need, despite the amazing capabilities of these AI tools, it still takes an expert to use them correctly.
Yeah, it's kind of like a friend of mine was showing me this. He's in the uh, he's in the coaching business, and he was talking about, or he showed this video of I think it was 4 or 6 BMW, whatever, I don't remember the model number, but they were all identical, same color, you know, same model, and they do these incredible synchronized maneuvers, like in a city, a circle in a, it's obviously all very uh, uh, professionally managed, and they all end up coming to a screeching halt and all parked in a perfect row. And the question is it the car or is it the driver? Yeah, I mean, it's a good car, but really it's the driving that allows that, to be done. Um, anybody
Exactly.
can anybody can buy a BMW, but very few are able to drive them the way they're, you know, showing it in the video,
Right.
which is
Right.
same thing with computers, software, AI. I mean, it's not necessarily just the technology; it's who's operating it and who's using it. And
Right.
the business owner can't be an expert in all that,
Right.
and don't want to be.
Yeah, exactly. And the other thing that I would add to that is it seems, and I'm sure that AI may very well get to this point one day. I'm sure there are lots of people that disagree with me on this, but I think one thing that it's still missing is it's not able to understand the full context of the client. Like, for example, their personality and how to deal with them on a personal level. That's such a huge part of what we do and a huge part of the client experience. And I don't think the tools are there for that yet. I don't think they're really even close.
Yeah. And from my point of view, hopefully they never will be.
I agree with that. I would like people to still have a role in this world.
Yeah. Um, so what would you say so far you would, say is the most rewarding part of having built your own firm and brought it to this point?
Well, I would say I think really have like the base for our leadership team now to move forward and really try and grow our firm and take that to the next level. And we have a really great culture, I think, where people are able to put their families first and actually live their lives and not just be a slave to work. So I'm really proud of that, and I think we'll just continue to build on that. Then the other, rewarding thing is really simple. We've been able to really help our clients out of some really tough situations, and that always feels really, really good because I might think of myself as an entrepreneur. I know what it's like to try and start and build a business. So when we can help our clients who are entrepreneurs succeed with their business, I know from a personal level what that's like. So to be able to help them with that is very rewarding.
And also to avoid those problems that you don't have to help them get out of.
Exactly. Exactly.
All right. So if there were just one piece of financial advice that you could give, or if you could give a business owner, one financial directive or encouraging them to do one thing, what would it be that you think might most dramatically improve their results or their situation overall?
Planning, investing time and energy and resources into doing financial planning because another really common problem that we see is business owners don't have any plan that they're working on that is guiding them. They're just taking it day by day, and I think that really hampers their ability to succeed. And I think a lot of times businesses can still be successful even if that's how they're operating, but they're missing on so much more potential if they were to actually take the time and energy and resources to invest in really doing good financial planning. I think that would pay off so drastically for them. But that can be a hard thing to convince people of.
And along those lines, do you offer that as an additional service that you would charge for? And if so, would you charge them by the hour or a flat fee? Or just tell me how you would. Obviously, it takes time and effort, and I mean resources from you to help them do that.
This should be part of our fractional CFO service line.
Okay.
And personally, we do everything on a fixed fee. We stopped doing hourly billing a few years ago for many reasons. It simplifies the whole billing process. It also really reduces friction between us and the client. There are no billing disputes. Everyone knows up front exactly what's going to be paid and what they're receiving in exchange for it. And it's much easier to plan for when you know exactly what you're going to be paying.
Yeah, and also they don't have to say, well, gee, maybe I don't have to spend that time and money doing that. And rather they're paying for it. They might as well
Exactly.
take advantage of it. So I agree with that.
Exactly.
That's great. Well, Grant, this has been a lot of fun. I think we've had a great conversation, and I really appreciate your insights and congratulations on everything that you're doing and what you've accomplished so far. And best of luck going forward. I'm sure you're going to continue to be very successful.
Thank you. It's my pleasure. Thank you for having me.
For our listeners, if you want to grow your business and grow your wealth, understanding your numbers and building the right financial systems and having the right relationships with advisors is essential. Thanks to all of you for listening. to grow your business and grow your wealth. And I'll see you next time.